Welcome to Acts Christian Church, where you're the head and not the tail.
This is the year of the family.
Welcome to our Thursday night community engagement program. Well, you know me. It's about dealing with relevant subjects that I believe that we should all know. And in the studio with me today, I have Aaron Tyson. And he is a financial service man who deals with individuals concerning mortgage and pensions. Now, you may have recognized him before, but I brought him in the studios because I think it's important that he talks to us about these particular issues. And here's the word: he's an advisor. So that means he gives advice. And so I want you to open your ears, your spirit, and to kind of hear what he has to tell us. Welcome, Aaron.
Thank you.
Second time in.
Yeah.
We had to bring you back.
Thank you. No, great to be here. Thank you.
Now, you're an advisor. Why do we need advisors?
I think that's a massive question. It's great to be asked that, because I think that there is a real gap in the understanding of what advisors do, what they're here to do for people, and there is a sometimes a reluctance to take that first step with advisors. The first thing that gets in the way, I think, for people is maybe the anticipation that things will be unfriendly, or that things will cost a lot. And the truth, it couldn't be further from the truth. The way that the model that we have is set up is around trying to do as much as we can for people. And if we have two services that we're doing at the same time, there is no upfront cost. But why use an advisor for perhaps a mortgage, for example? I think that there is a lot of conflict in the way that people see banks. So if you were to ask somebody, how do you feel about banks in general? I think that the response would be sort of, I don't know.
We don't see them anymore now, do we?
That's it. A lot of the branches are closed.
They're closing down.
That's right. And but I think that with the turbulent times that people have gone through with banks, banks by and large, there is maybe a little bit of concern there with the way they feel about their bank. Banks spend millions on making people feel comfortable with them. You've got, I won't say the name, but if you think of horses dashing across the beach, you know what I'm talking about. But if you think of the advert, not really much gets said. No. It's just a feeling.
A brand.
That in comfort that it delivers. In reality, mortgages are able to be delivered upon based on very strict criteria. So when people feel that they can approach their bank to do whatever they need, it's not true. So where we have this conflict of the comfort that people feel with their own banks, and the reality of that bank may not deliver on what they need specifically, because they have very rigid criteria of what they will and won't accept. So we have this duality between the way that banks purport themselves and what they can actually deliver. And as advisors, what we're able to do is cut through all of that, understand the way that the banks work, and more importantly, understand people, understand what they need, and then leverage that on their behalf.
Well, that's interesting, because obviously back in the day, you would walk into a bank, you've been banking with them for years. Yeah. So you also build up that relationship, maybe expecting to get a bank mortgage when the time is right. But we're saying those things are not as it seems. That's why we need a person like yourself as an advisor.
That's part of it, because there is a loyalty that's based on consumers, but not based on the banks. They will treat people where you get sort of slightly better current accounts or what have you. But in reality, when it comes to mortgages, the biggest sort of financial transaction that people make in their lifetime, it doesn't change the dynamic of what they can do. Banks are very set in their ways of what they can offer and for what types of people, what types of employment, what income multiples, debt to income ratio, the list goes, it's endless. And understanding that is so important, and that's what we do.
Okay, so, and I know you're going to open this even larger. So what is the advantage of a person like you as an advisor than just walking into the branch where a bank manager is, explaining, I'd like to purchase this building, what's the going rates, let's get it done. What's the advantage of you as an advisor helping somebody on that road?
Well, the first thing is that we're whole of market. So that means that we're able to go to any bank or building society. So going into your branch will limit you to the products that are available with that specific bank.
Right.
They can't go outside of that. And often what you find is that banks will have products that are, so when we say products, we're talking about fixed rates and trackers and what have you. They may have some that are good value, poor value, or may not sort of have the room that you may need based on your specific position. So, for example, it could be that someone is remortgaging, they want to go to their bank, but their bank may only have fixed rates, but they may need to raise money in the future or may want to sell.
Right.
And a fixed rate is going to be too restrictive for that. And we see that quite regularly. So, understanding that the bank is there to help themselves, we as advisors are FCA regulated, and the FCA want people to be advised because it makes the market innovative, it makes sure that the banks are doing what they need to do. And when we have an advised process, it means that we understand inherently what people want and need, and are able to deliver upon that.
You just mentioned the FCA. Is that your regulator?
Yep, so we've got, so the FCA is who regulates anything in relation to mortgage advice. The banks are regulated by the PRA and the FCA. In terms of advice processes, everything is fully under FCA regulation. And to be an advisor, it's not a straightforward process to get that sign off. And we are checked regularly based on the types of cases we submit on whether or not we are making sure that we're acting in the best interest of people.
That's good. That is very good to hear. We know there's scammers out there, people losing their monies and so forth. And so there needs to be some type of regular, somebody who's going to make sure they can bring regulations in to protect the individuals. And you're saying every deal that you make has to now go somewhere else before it can be signed off, before it can be stamped, rubber stamped.
Absolutely. So everything that we do is checked, and it has to be compliant. The long and short, there is no shortcuts in the advice industry, and the way that it works is based on ensuring that people are as well advised as they can be. So, as we're here today, speaking to people and working with people is what grows the business, and people understanding that, when we're interacting with them, that we're doing the best for them. There's a big issue at the moment around non-regulated firms, and also around social media, sometimes for non-regulated firms. So TikTok and Instagram and Snapchat and all the rest of it, it's very easy to find out whether or not someone's regulated. You can look them up on the FCA register.
Oh, good.
So you can do that with me, you can do that with Mike and Bridget, who you'll speak to later. And if you want to check whether or not somebody is credible and has the correct accreditations, that's where to find it.
I think it's important that we talk about that, because that's why I mentioned, the importance of an advisor. So you make sure every I, T's crossed to ensure that individuals in the most safest hands as far as their money is concerned.
Yes.
And that's the first protocol.
It is.
Seeing somebody like yourself.
It absolutely is. I mean, the most important thing that we deliver is value, because ultimately we want to be making sure that people are obtaining the lowest rates possible, getting the lowest price protection plans, ensuring that pensions are able to grow in the best ways into the future. So interest rates are very important from that perspective in trying to get the lowest rates. But I can't stress enough how important it is for us to understand people as individuals. And that's something that banks just simply cannot do. You know, understanding what someone may want to do in 6 months' time, or there's an inheritance that's coming through, or someone wants to capital raise. And sometimes things may seem straightforward to the individual, but when they speak to an advisor, we can explain precisely what the limitations are, the pros and cons, what they need to be aware of in making their next important decision. And this is all before, you know, any form of credit scoring needs to take place or any form of application takes place. It's really taking a pragmatic view on what is best for the client, first and foremost, always.
Okay, so we've gone through that. The client feels comfortable. You're a part of organization that keeps them safe.
Yep.
You give them the best options that are out there, not just one, because of what one bank says. You're giving them options. Okay, so once that client feels comfortable, then the next movement is, what do you offer in what area? And I think mortgage and pensions.
Yeah, pensions as well. Yeah, so pensions and investments are becoming a larger part of what I do day to day. You know, with pensions, it's very easy for people to pay into a pension. Obviously, most people are paying into a pension through auto enrollment. Came out sort of, you know, about more than 10 years ago now, and or almost 10 years ago, I should say. But you know, the amount of people I speak to and have got no idea what's in there, you're quite happy to pay into a pension and know that will give them some lifestyle, but have no idea what that is.
So, but on the onslaught, it would be the advisor would saying that if you're paying this amount, this is what it should like with inflation at the end of 10 years, 5 years.
Exactly.
And you're saying many don't even have a clue.
No, exactly. So the best way to sort of have, the best way to manage a pension is to just have half an idea on it rather than no idea. Because a pension ultimately is got the best position to grow when you have an understanding of what it's doing, that the charges are low, that it's performing within your risk allocation. And the most important thing, I think, is to, like I say, have half an eye on it. Because when it comes to mid-50s or 60s, and people, you know that you need to be looking at your pension at that sort of age, you know, people will then try to pile in loads of cash and make sure that there's some kind of retirement plan in there. But if they'd had half an eye on it before, they wouldn't have needed to do that.
Let me ask you, let's go right back to the beginning. Give me an idiot's guide of a pension.
Yeah.
What is it? What is it? Is it there to do? What is it there and designed to bring at the end of my working life?
Yeah.
Why do I get one?
Yeah. Well, that's it. I mean, I think that with auto enrollment that came in, where we all pay, if you're employed, you pay into a pension.
Yes.
You've had to opt out, and I think the reason for that is that the government gradually are trying to take stress away from the state pension, because the state pension doesn't really give people much in terms of its buying power. A pension, so you'll see, you speak to people in the street and say, oh, I don't invest, but in truth,
we do.
You do, because you have a pension. And the pension is essentially what allows you to retire in creating a fund that follows you through your life, that you pay into regularly or not, and it will create some form of income at the end of it. In terms of the way that pensions work, there's loads of crucial information that's around sort of older pensions, current pensions, the facilities that they have with them, additional benefits, inheritance tax planning comes in with pensions, because many people don't realize that pensions sit outside of the estate. And I'm not trying to make it complicated, but understanding these things, and they're very easy to explain to people once we have an understanding of what the pension is doing. So I'll give you an idea where, let's have we've got a client who I'm seeing face to face.
Yes.
And they've said, I'm not sure what's happening with my pension. I say, okay, no problem. So completely free of charge. What we'll do is we'll write out to the pension providers, and that's key, because keep in mind that people move jobs, and their old pension pots sit everywhere.
Yeah, that's right.
And they just sit there. And a big part of my job is to pull those together. But what we'll do is we'll write out to the pension providers, understand what's in there, understand how it's performed, what charges are there, what benefits are there, and relay that to the client. And this is all completely free to do that. And
so just getting the best benefits out of the pensions, even if they're dotted all over the place, by pulling them together.
Exactly. So, but only if it's in the client's interest. So it could be that someone, we have maybe 5 pots, one of them has performed really well. I'll say, listen, we should keep that where it is because it's performing well.
Okay.
The charges are low. As advisors, and this is the crux of it, we are fiduciaries, which means we're only ever paid if we can truly show that we've done something that is for the client's best interest.
Well, Aaron, so now it's getting interesting because that's why an advisor is so important. Because although we may have had various pension pots around the place, we don't always watch, as you say, how they're performing, or we don't even know if we can transfer one pot into another because it's performing better. We need an advisor. We need somebody to give us that guidance that we can get the best out of our pensions. So when we do retire, we've made some good decisions. Yeah. So it's vitally important that we have a person like yourself speaking to individuals and clients.
But that's why that first part is free, because that information should be available to everybody, but not understanding the ins and outs of how the pension works. It's no failing on a normal person to not understand that. Yeah. But as advisors, we're here to say, listen, this is working well, this is not working so well, these are some things you should be aware of, this is what it will be projected to be later on, and all of that is free to find out. And like I say, when we have 2 advice processes, so it could be that we're looking at mortgages and we're looking at pension, or mortgage and working with protection, which is the 2 go hand in hand.
Yes.
No fee. There's no fee at all.
Well, you heard it here, no fee whatsoever on this. And I think we need to look into our pensions because we do want to have that income protected or that income continued when we finish working at that level. And do you advise us to bring it in line to inflation? So the way that pension funds work is that they aim to be inflation regardless. The fund that you're invested in will be based on what aptitude to risk you have. So when we say risk, it means that the pension fund, or that everybody has to agree that there needs to be a level of risk in order for it to grow. So it's got to be at a point of variability. Yeah. And trying to aim for a potential income after retirement or a lump sum, because we've got the tax-free lump sum, of course, that people can take. 25%.
Yeah, 25%, that's it, at 55. All of that we get involved in. And most people know that they need to speak to advisors at that point. But what if they'd looked at it when they were 35?
I hear you.
And what would the lump sum have been at that point?
Yes.
And this is why I think it's so important to, like I say, have half an eye on it.
Got you. All right. So I hope that opens up. Now, the last question I want to ask you before we actually go on to mortgages, because everybody will have a mortgage.
Okay. Yep.
Is how easy is it to start a pension? What would I need to do? There may be people watching at this moment and think, you know what? I need to do something about my pension. What is the first step?
The first step is to find out what's going on. And what we have is a form that's called a letter of authority.
Letter of authority.
Letter of authority. It sounds more official than it is, really. All it is an information request to the pension providers for them to detail, with no wiggle. This document is a good 2 pages, and it details all of the key information that a pension needs to operate. And with that, the pension providers have got no wiggle room to not provide us the information that we need to respond to you to tell you exactly how it's operating. So that's the first point. And like I say, that's
is it all linked to our national insurance number, our pensions?
Yep. So national insurance number is linked to it. So that the main things that you would need to look into a pension are your pension provider, policy number, name, date of birth, address, national insurance number, and that's it. So and from there, all we need is a signed form, which is, like I say, it's free. We send it out, and then we get an understanding of what to do. Starting a pension. Most people already have pensions, but starting a pension, should you want your own one, is very easy to do. It's quite easy to set up within us as advisors, and you could even do it on your own. The main reason that someone would set up their own pension is to avoid paying too much tax. And this is really key, because when somebody is maybe in the 40% bracket or the 45% bracket, once that money has been taxed, it's gone.
You can't get it back.
You can't get it back. So, but when you pay it into a pension, you get the tax relief, you don't pay the tax, and then later on you're creating a nest egg where you can choose to get the tax-free lump sum, or you taper the income as you want for tax efficiency. And that's a big part of what we do as well, just understanding retirement planning, but also tax, and then we're able to advise on what specifically to do. But setting up a pension is very straightforward. The biggest trick that I could give you would be, if you're paying into a pension through your employer, see if they can increase their contribution, see if they can match higher contributions, because that will give a massive impact to maybe even 3 or 4 or 5 years where you've got larger match contributions because the employer's paying for it. It's free for you.
Yes.
So trying to see if you can get more from the employer and see if they'll match that. That's a real winner for creating retirement wealth.
Excellent. I love that. Retirement wealth. Good. All right. I hope you got that. Let's just go to the next big thing in everybody's life: owning their own property. It's a milestone. It's a foot on the ladder. But as you know, some people don't know how to go about doing that. So again comes the advisor.
Yeah.
How important is it getting the right mortgage and getting the right advice?
It's crucial. I've seen many people come after and speak to somebody after where they've done the wrong thing for them. One thing that we have to do as advisors, and especially in a volatile market, which we have been in for the last sort of 18 months, is really understand the economy. Getting an understanding of that helps people to understand what they need to do. And a lot of people will walk into a mortgage or walk into a situation where they think, I'll pick the lowest rate, I think that's going to be best for me.
Or a tracker.
Yeah, people, this is it, you see, and this is part, because people who would have been on trackers before, would have really suffered because the base rates increased, right? However,
I know about trackers.
Yeah. So, but now we're on the flip side, because if you can imagine the Bank of England base rate as a bell curve, because we've had this hike from 0.5 to 5.25. The reason it's been increasing to that level is inflation.
Yes.
And inflation's been falling all the while that the base rate's been increasing. I think it's fallen to 3.8% now. That was as of 2 days ago. And what the target for the UK economy is somewhere between 1 and 3%. Once we hit that target, the base rate will be able to fall. Because at the moment what we have is what's called fiscal drag. And it's the base rate is deliberately high in order to stop new money being created, debt gets paid off, less debt gets taken, and that slows the economy down, i.e. inflation falls.
Yes.
So what we have, so as you rightly mentioned, somebody who was on a tracker before will have suffered while the base rate has increased. However, we're now on the other side of that. We're about to see the base rate falling down. So that is a small example of what we can deliver to clients and understanding the bigger picture of what may be important for their decisions personal to them as we move into the future.
Again, as you're saying, having one eye on the economy, not everybody understands how the economy moves from up to down. And so henceforth, the importance of an advisor that can sit us down and advise us what would be the best rate or the best mortgage to take out. In this economic, I would say, downturn, do you see a lot of people coming to you asking you for mortgages and the best mortgages on the market to purchase maybe their first property?
Well, the purchase market has been quite slow because first-time buyers, which fuel the purchase market in general, because of course at the bottom of every chain there needs to be a first-time buyer. So someone's moving their house, someone's buying theirs, and so on and so forth. So the market for purchases has been generally quite slow, but the remortgage market and people going from 1% to 5%, that's a big market.
That's like they call it flipping, but the remortgaging, that means
so remortgaging is basically the term where you're moving from bank to bank. But in terms of what we do as advisors, where we have a case where we know we have a mortgage expiry, a rate expiry coming up.
Yes.
So we'll be in touch 6 months before.
That's good.
So, and the reason for that is that that's typically the earliest period of time that you're able to look at your options with the existing bank and on the open market. As advisors, we can do both. So in terms of the existing lender, if that's the best option that's available, we'll tell you. So even if it's with the existing bank you're already with, that we've arranged the mortgage for, if it's better to do that, but we'll be able to at least tell you, this is where the market is operating, this is what you've got available with the existing lender, and we can do both.
Whose responsibility is that? Well, like when your mortgage is almost coming to the last 6 months to make the call, any onus, the advisor or the individual, he should be also keeping his eyes on on his mortgage as well?
Officially, it's the individual.
Okay.
But in terms of what we do, we want to make sure that people are as best looked after as they can.
Of course.
So, yeah.
When that time's gone, it's gone, isn't it?
Exactly.
And it's costly.
And the market moves. The market moves. Market moves, criteria moves. It's a constant moving target. Not people that aren't in the mortgage industry don't see the underlying volatility of it all. It doesn't necessarily mean that it's bad, but understanding it and being able to basically transcribe it for people, allow people to understand it, that it's really crucial.
Just to kind of wrap this up now, I think, we get individuals just finding it so hard to get on the property ladder and to get mortgages. Is there a way out for them?
There are some. There are products specifically aimed at first-time buyers where you can borrow more as a result of taking maybe a longer-term fixed rate. It's not ideal, but it will allow for more borrowing. We are seeing more and more people having gifts from family. So, in the London area specifically, of course, we've got people who are equity rich, cash poor, so accessing that capital to help the younger generation onto the ladder is very common. But for people who are buying their first property without any help, the first things to consider are your lifetime ISA, paying into that, getting the government bonuses, so you can have £1,000 per year that you can pay into that. That helps with your first purchase or for later retirement. But also trying to ensure that your debts are kept low. That will allow you to borrow the maximum that you can. These products change regularly.
Yes.
And affordability is changing regularly. So speaking to somebody that understands that is key.
The advisor.
The advisor.
Look, just wrap up. I want you just to look at the camera and just kind of tell them where you're located, when your opening hours, and an opportunity to see you if they want to deal with a pension or mortgage.
Yeah,
So over to
perfect.
you.
Yeah, well, if you'd like to join us down at Hosannah Associates 233 Longley Road, which is in Tooting, you can find us on Google. Our opening hours in the office are 9 to 5. We can have appointments up to 9 p.m. on evenings, just to make sure that, if that's sort of more agreeable to you, then we can do that. We do appointments face to face, and we can also do appointments through Zoom and Teams, so remote. We're here to cater for your needs. So understanding you is exactly what we do as advisors. So please feel free to give us a call if you have any questions, and we'd be happy to help.
Beautifully said.
Thank you.
This is really my quest, to bring organizations like you into the limelight, and so they can get the best possible support and advisor. Thank you for joining us again. Thanks, Aaron, for coming in and sharing with us, giving us the knowledge that I believe we all do need. And as I said, if you need any further information, just replay this. I'm sure the address and in our background you'll see. Just Google us. You'll find the Mike Hosannah Associates. They're based in Tooting, as you mentioned.
That's right, yep.
Google them. Great people. I know them personally. If you are in that position of a mortgage or looking at your pension. Again, thank you for joining us today, and I pray that this journey has been an education to you. But you must remember, you're the head and not the tail. Thank you for joining us.
Christian Church, where you're the head and not the tail.